is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom. Nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Well, folks, we appreciate you growling and prowling with us out here. Bottom line, folks, I want to first off thank Jacob for holding down the court. You know, Bridget and I had a nice vacation in the Caymans, and we came back to this cold weather, and I just got hit. And guess what? We're back. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We have the Dow Industrial trading down 93, Nasdaq's up 45, S&P's up 10. Gold contract down up $8.30, traded at $2,049 an ounce. We had silver up 26 cents, $22.56 an ounce. Light sweet crude down 27 cents, $74.49 a barrel. Notes and bonds. The 10-year note down 9 ticks, trading 111.07. The 30-year down 28 at 119.27. And King Dollar right now is trading up 275 ticks, 103.607. Euros 108. Yen's 148. British pounds at 126 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we're at all-time highs. No two ways about that. And, you know, the bottom line is that what you had the NASDAQ, well, the Dow Industrials had broke higher first, NDX, NASDAQ next, and then you had the S&Ps just break this week. Friday. Now, that being said, you can see, you know, you're getting a contraction up here on volume right now, which I expect you're going to get. That being said, is that when you take a look at this on Friday, okay, this is taking out B points and taking them out with volume. So we get a market that wants higher price. We go into the NDX 100, and now we're in earnings season also. We take a look at the NDX 100. What do you have with the NDX? Same type of setup. On Friday, you had the juice come in. You took out a swing point. On the NDX, you took it out like with huge volume. Actually, let me see this on a weekly for a second. So on the weekly, 120. Oh yeah, on the week you got an ABC up in the weekly too. It's a monster move, man. It's a monster move, but it's a move that the market still wants to go higher. That's what it comes down to. We go take a look at the note and bond market. Now, the note and bond market has been pulling back into its strength. Has lighter volume. I expect what you're going to see another rejection of lower price. What we got last week is that we got a rejection of lower price. Right now, there's only 1 million contracts traded inside of the 10-year, and the bottom line is that you're going into 2.37 million. You know, so I suspect note and bonds still want to go higher. That right there is, and we'll see how this shakes out, because this is the big move here. The big move is still all about the dollar. The dollar right now, that has wide price spread out here today. If we take a look at it, you're at 103.604. And the number to keep your eye on is the 104 mark, approximately 104. 104 is the 50% retracement from the move lower. We go over to the oil market. We take a look at oil, what we have with We take a look at the oil market out here. You're at 74.48 right now inside the oil market. Chopping around. Today we get 285,000 contracts. Let's just take a look at this. Yeah, this is kind of building a base. This is building a base again. I mean, oil, last 6 months we went from $86, you got down to the 68. And right now it looks like it is building a base to trying to get inside the higher range again. We'll see whether they can get any juice. You definitely had juice yesterday. Last week you had some pretty good juice. You have 3 higher lows right now. You don't have higher highs yet. But the way that is setting up, it looks to me like you very well could have get them. Netflix, NFLX, this is going to be coming out with the numbers after the close today. You can see that Netflix just paid up $5 billion to TKO for the Raw, wrestling the Raw. That's $5 billion over 10 years. Netflix is going to be coming out with their numbers this afternoon. Now, Netflix is trading $4.90. They are going to be looking for the top line to be $8.7 billion and the bottom line to be $2.19. And that has actually gone down. So the next quarter, the next year, they're actually looking for a lot more. Let's just look at this and see how this is set up. I know when I was listening to Tommy's show this morning, there's quite a premium inside of the option market right now. I see, okay. Yeah, so what you had is that you had Netflix traded up to 700, came down to, oh my God, I thought I was hearing things this morning. No, I guess not. To 162, and now we're at 490. And that, let's just see how that shakes out. Okay, so you're at the 0.618 on that. Now that's going to be intriguing. Listen to how this conference call comes out, because you are at the 0.618 of the whole move lower. So we got smoked on the way down. We already did a 0.618 on the way back up. We get it and we take a look at the silver market. Now, silver's had a really tough time, man. Bottom line is that the dollar hasn't cooperated in the last couple of weeks. That being said, though, silver went a lot lower than gold, and it's up 27 cents today. We'll see whether it can hold. Silver was going back into its strength all the way from last September, where gold was coming into its strength from only a few weeks ago. Because what did happen is, there's no doubt, gold had got over its head and shoulders, failed, got all the way up to this 2,098 again, back down, came all the way down last week to the 2,004, and now, bottom line, it's got to get back over that whole area again. So gold's got a lot of work to do, and I don't think that that's going to get done until we actually see that dollar, and just, that dollar wants a 50% retracement. Between the dollar's still running the market out here. That's the bottom line, folks, okay? You get a choppy market, dollar's still running it. Stay right there, folks. We're going to come right back with our man, Mr. Basil Chapman. We have the Dow Industrials right now trading down 78. Nasdaq's up 57. S&Ps are up 13. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow. Dow Industrials right now trading down 80. We got the NASDAQ up 54. S&Ps are up 12. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday. And don't forget, folks, Basil does an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get to Basil's newsletter, folks. Come over to our website at TFNN. You're going to go right under newsletters. You're going to see it on the left-hand side, the second one down, the opening call. You hit subscribe. You can get the opening call for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 or 22%. And you get it for 1 full year for $1195, which is a savings of $593 or 33%. Now, they all come with a 30-day money-back guarantee. And as you get Basil's newsletter, folks, okay, he has approximately 11 different archives in there that you can go through all of them so you understand how he looks at the market every day, how the Chapman wave looks at the market every day, and you can ride this market. Basil Chapman, what's going on?
Well, it's great to have you back. We missed you. Hope you're feeling well.
I feel good. I can't be growling just yet. You can feel it in my chest a little, but I feel awesome. And I appreciate it.
You're looking good,
yeah.
And it's great to have you. So, I thought I'd just review, because I haven't spoken to you for a little while.
Yes.
What I'd spoken to you about quite a few weeks ago was I said I drew in this rectangle formation, and I said to you, it looks to me like there could be some kind of a sideways consolidation coming up. I don't see anything really bearish, but I did see some kind of a consolidation. We had that in the Dow, we had that in the S&P, and then 3 days ago, or 3 sessions ago, I should say, we broke to the upside. So this is very interesting, because you can see on the left side chart, that's the Dow day. We still remain our long-term longs. We still have our long-term longs in the Dow. We did have a short-term trade, just a bearish trade for the short while, and we took that off. So essentially, this is now your key support level down to 37,000. Between 37,700 and 37,000. So to me, from looking at what's happened up until now, this is really the congestion area. And I think there's still some form of congestion. We're actually rotating through different, even within the sectors that have been very good. And you can see so let me just finish. This is the daily chart, and this is the weekly chart. And you can see there's this expanding triangle here. It's like a little wedge formation.
Yes.
And we just nicked the top of, this is the weekly chart. Now, what is really quite phenomenal, going to an all-time high, we've had, this is the 13th week, I believe it's the 13th week with higher highs. So this is still a leg from the 32,000 low late October. This is still just one leg up in the Chapman wave. And it's still a leg up if next week...
That's quite a leg up.
Isn't that quite? Yeah, it is. And if all of next week there is no new high, even by 1 penny, whatever the high is this week, then you make a peak A. And I'm looking at this closely. It's only Tuesday. I mean, we've got a lot of market action to go. We've got politics. We've got economics. We've got we've got sector rotation. So we'll see where this closes. But what's really important is that we've broken to a new high in the monthly chart, and this is only leg C. So I just thought I'd quickly go through, for those who are new to my work, once I am in a buy signal upgraded to a buy mode in whatever it is, whether it's the 1 minute chart or whether it's a monthly chart, if it gets upgraded through the technicals to a buy mode, it means that there should be at least 4 higher peaks. They're alphabetized sequentially. Peak A is the first. 1 penny above A starts leg B. Peak B, if it goes 1 penny above peak B, starts leg C, etc., until it gets to D. D is the 4th highest peak. That's where other things can happen. I could show you dozens of charts. I don't want to do that right now. I'll do that in my show tomorrow at 10, where I show how many times we can get to. Actually, I can do it right now. Look,
well,
even
but Basil, let me just ask, because what you are saying, however, is that, because this first leg was so dramatic, I mean, in order to get to a peak D, we're talking months away, no matter what happens, right?
You're talking about 1 whole week before you can call it a peak A. Then another week to go the leg. So the week going into February at the very earliest, and that's on the weekly chart. The monthly chart goes even longer. So that's I consider that to be very positive. Yeah, look, here's the 10-minute chart. There's your peak D. You pull back. You do a cup formation. There's a 10-minute E-mini. And what does it go to? It goes to leg D right now. And it's a leg until it makes a lower high. So this is the same technique. I'm showing you 1 minute and 10-minute charts. It's a fractal. So it means that the same thing happens in the big picture. So if this is a leg A, this is it doesn't mean to say we can't drop sharply. It just means there should still be higher highs in 2024. I consider that to be a nice indicator, and I'm looking forward to the rest of the year. So that's the Dow. Then I thought I'd just update, because you remember we had bought Microsoft for subscribers at 338. It had a really nice rally all the way to, it actually hit 400 just yesterday, 400.62. We've taken little bits off, and we keep adding and taking off so that we've got a core position. We use it as a trading vehicle now. But here as well, look, the weekly is in a leg B. I'm calling this a leg B. And the monthly is already in a leg D. That doesn't mean to say that it has to break down. It just means you've already reached a level where the buy signal to buy mode has achieved its goal, which is to go to a D. So that's positive. And then there's one that I'd spoken to you about for quite some time, and I said there's something going on here. This is the Uranium Energy Corporation. So we've got it down in the 360s. It's now trading at 784. It hit 829. We took some money off this. But what I wanted to mention is this is uranium. It's very different to the crude oil or the other parts of the energy sector. So I said there's something going on in this area that if you go to the URNM, which is a uranium ETF, look, it broke out leg C in the monthly chart, leg C in the weekly chart, peak C in the daily. This is holding really well. I'm not sure why, but it's really interesting to see. And it was a CCJ is the other one. This is really the boss. This is the Cameco Corporation uranium fuel. It's gone to a leg D in the daily, peak D in the weekly. So I'm looking at this and I'm saying, gosh, I wonder what's going on in uranium that it's held so strongly. Is this going to be one of those instruments that actually doesn't pull back for quite a while and keeps holding up? So we've kept that as a core position, the UEC, and I just keep raising my eyebrows saying, I'm not talking about just uranium. I'm saying, what is it about uranium in this economic and political environment that's important? And I can't really answer the question.
The new reactors, man, are really powerful, and they're not dangerous.
And a lot safer.
But it's a public relations deal. But those new reactors are awesome, man.
And it could turn out that in fact eventually becomes some kind of resolution. Anyway, the uranium is acting very well. So and there's something else that I thought I'd mention here, that within the context, you spoke about the dollar. Now, we've been long the dollar since 2018. The dollar is right at that leg D that we were looking for, right at the 200-period moving average. So this is going to be a key moment for the dollar over the next week.
And folks, come over to our website at TFNN. You're going to go right into newsletters. You're going to see it on the left-hand side, second one down, and hit that opening call. You are off to the races. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom. You too.
Thank you. Stay right there, folks. Come right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Yep.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we have the Dow. Dow trading down 94 right now. Nasdaq is up 49. S&Ps are up 11. We get the gold contract trading up 780. Silver up 26 cents. Let's get over to our man, Mr. Tim Wood, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. He's got a great newsletter. That's ord-oracle.com. Tim Wood, what's going on, brother?
Well, did you get all my charts?
I have all your charts, man. I do.
All right. Did you get? I sent one kind of late.
Yep, I have that one too.
Okay, good. All right, we can start. We're going to look at the bigger picture again. Probably people are getting tired of looking at this, but you got to remember what the promise of the big trend is. The bigger trend is. And the first chart is the summation index. We've gone over this quite a few times. Just a reminder is all it is. It'll be quick.
No, boy, listen, we want to go over these. We want to go over these, period, yeah.
Yeah, so, the top window's summation index. And in a nutshell, you have to have a buying or a selling climax. Then within 2 months, you have to have a buying climax or thereabouts. And we had a selling climax on October 27th of last year, so 3 months ago. We hit minus 800 and something. And we rallied to plus 1,000 on December 27th. And previous times that happened, normally the next 12 months or even longer sometimes, promises a bull market. So that's just one indicator. Looking at chart 2. That's
quite an indicator, though, right, Tim? I mean, for long-term perspective, folks, okay, this is something you want to keep your head wrapped around, okay? Particularly in a market that we have, because it's a powerful market, man. Okay, so I'm ready. I'm on number 2 now. Yes?
Yeah, so number 1, so it has a real high probability. Matter of fact, the chart number 1, that goes back to 2007. And every time it reached below minus 700 and rallied to plus 1,000, the market had an uptrend, sometimes 3-4 years. But, promises a good 12 months next year this year looks pretty good. So for chart 2, it's kind of a review again. The bottom window is the SPX VIX ratio.
Okay.
And the top, this is a monthly time frame, I think. This is a monthly time frame. And so the top window is the VIX. Next window down is the SPX, and the bottom window is the SPX VIX ratio.
Right.
And normally at tops you get the S&Ps going higher, and the SPX VIX ratio making lower highs. That's the bearish divergence. And right now we don't have a bearish divergence. We got both the SPX VIX ratio going higher highs and the SPX ratio going higher highs.
Yep.
So that bodes well for the intermediate term. So it looks good. I think there's a head and shoulders bottom going on. If it is, that would an upside target around 570, and that's approximately at least double digits higher than where we are right now. So not every week's going to be an up week, but it looks promising. So we'll go to chart 3, and now we're going down to the smaller time frames.
Okay.
You look at the bigger time frames, and it all looks pretty good. So you go down to the smaller time frames, and this is a weekly chart of the middle window is the SPX, and the window below that is the SPX VIX ratio on a weekly time frame.
Okay.
Back at the 2022 top, you got the SPs making higher highs. That's that kind of pink area, and the ratio making lower highs.
Yeah.
And now in the current time frame, you got the SPs making higher highs, and you got the ratios making higher highs.
And
so in midterm, looks pretty good.
Right, and folks, remember this, okay? This program's archived, so if you happen to be in your car right now, driving to work, driving home, whatever, as Tim gets some beautiful charts out here, so remember that you can just pick up the show anytime when you get home, but you want to look at this because it's so clear, because Tim's been on now for 7 or 8 months, okay? And it's so clear that when you saw the ratio in July turning down versus what we have now, you can see, as Tim has explained, that the SPX is going higher and the SPX VIX ratio is going higher, okay, which is so cool, Tim, man. This is really cool that on one shot you can see both the differences, you know what I mean?
Yeah, you go back, and so I went back all the way as far as I could, back 1980s, back to,
Yep.
And so this works over time. So let's go to the next chart number 4.
Okay.
And let's just kind of look at the short term here. And this is, does it need to be a real concern? Yeah, maybe. But right now, the bottom window is the SPX, is the daily, what's going on. So this narrows it all the way down to the chart. So the SP right now is going higher highs, and the ratio, which is the next window up, is actually making lower highs.
Okay.
So you got a little divergence here.
Yeah.
And actually, over time, I found out sometimes these divergences go away. And so I'm kind of watching here. I got long last week. I forget what day I got long. But I'm long the market still.
Yes.
I got long on January 18th, so it was last week. And so I seen the ratio making lower highs. But if you look today, the market is up a smidge, barely. It's almost unchanged. But the VIX right now is making lower lows. So that buys me another day here of a chance that the S&Ps may make a higher high, and that ratio may get back to the previous high.
Isn't that
Don't know
cool?
if it will or not, but if it does, that would buy me more time to the upside. So I'm thinking that's what's going to happen here. I think even though we got a daily divergence,
Yeah.
that divergence may go away before the week is out.
No, I
don't
can
know if
listen.
that'll
I can
happen
see
or
what
not.
you're
I'll
saying.
have
And
to
if
wait
I
and
bring
see.
I bring this up and show them, that VIX, folks, okay, is at 12.71 right now. So, and that what's so cool about when you're listening to what Tim is saying here, it's really cool when you understand the ratios that he's talking about, because it's going to buy him another day. That's what it really comes down to. Which is, what's so cool, Tim, is that because as you project forward, it's like, okay, I see what's happening out here today. And, you get Netflix coming out after the close, and, we're in earnings season now, so there's going to be a lot of numbers coming out for sure.
Yeah, but that's it'd be so if tomorrow's down, say the SPs are flat to up tomorrow again. See, that's what it is.
Yeah.
Or even down a little bit, and the VIX is down again. That would buy me another day. So I don't know. So we'll see. Maybe I'm out of this trade. End of the week. Maybe I'm not. But this is how I'm looking at the market. So
it's Tim Wood threading the needle, baby, threading that needle, Tim. You stay right there.
Before I always kind of get short on the trigger, but really the money's really made if you can catch a trend, and sometimes the trends are kind of hard to catch. But if you're patient and you kind of wait through it, trends where you make your money at. And this market may be trending here. I'm not sure if it's not.
No, I get it. Stay right there, folks. Tim and I coming right back. The Dow Industrials right now down 110. Nasdaq's up 45. S&P's up 9.5. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim with Tom O'Brien, folks. We do appreciate you growling and prowling with us out there. We have the Dow Industrials right now trading down 108. NASDAQ is up 46. S&P is up 9.5. Okay, Tim, where would you like me to go on these charts?
All right, go chart number 5.
Okay.
And charts. This is another kind of a long-term chart. It goes back to looks like mid-2017, I think, or somewhere in there. But anyhow, the bottom window is the 10-day average of the trend.
Yeah.
Next one up is the 21-day average, and the third window up from the bottom is the 63-day average. Last week, all three of those trend time frames got in bullish territory.
Wow.
And what's important is the 63-day. Now, 63 days, basically a month of trading.
Yes.
And when that turns bullish, and these only get above 1.10, you're looking at least an intermediate term low. This is a lot of times it can last, a long time. The blue areas on the chart are all times when the 63-day trend got above 1.2. So a trend reading above 1.2 shows panic in the market. And the more panic, the longer time you have panic in the market, usually the longer the rally phase. So when you get a trend reading on the 63-day above 1.1, it shows basically a whole month of panic. Even though the market really didn't decline any, per se, it kind of went sideways more or less. People were panicking, and panic is kind of the fuel for the market, I guess you might say.
Sure. Well,
if you don't have any panic at a bottom, it's never a bottom.
When we're looking this is quite a statistic. When we're looking at the 63-day trend, that's 3 trade months. We average 21 trading days a month, right? So,
yeah, right. Okay, yeah, you're right. 3 days, yeah.
Yeah.
It's 21 days a month. Yeah, the 63 days is basically 3 months.
So you talk about climbing a wall of worry, man. People were worried the whole way up. Interesting, man. Yeah. Wow.
Yeah, you're right. That's exactly what it said. They were worried all the way up, but for a while they got bullish, last July at that top.
Yep.
Because the 63-day trend was hovering around bearish levels. Then the market went down. Then all of a sudden the market went up, and people got scared. So they sold into the rally, that's bullish.
Yep.
So if you got the market going up and you got that trend going up same time, then that rally is going to continue.
Yep. I love these stats, man. Okay.
Yeah. So anyhow, this 3 months of panic is really a bode well for the year. It kind of supports the summation index. Kind of supports the
yeah,
VIX
I know what you're saying. You put this together well, man. We started off with that longer term. There's no doubt that if you look at the last 63 days, folks, okay, that's climbing the wall of worry. Whoever coined that term years ago, but that is it.
That was Joe Granville coined that term.
Well, was it? Wow. Okay.
Yeah,
cool.
Yeah, Joe Granville. But anyhow, yeah, you really want a wall of worry. If you got everybody agreeing with the market going up and the trend, say, a 10-day trend's down around 0.8 or even lower, that's usually a disaster for the market.
Okay.
So when he said the wall of worry, I put it in terms where you could actually see it, and that's the trend reading.
Exactly.
So
pretty cool.
So when they say a wall of worry now, you can actually go to an indicator and look at it if there is indeed a wall of worry instead of somebody just saying what
you can do a fact behind it, which is awesome. No, I like it.
you can put it on paper and look at it. So that we do have a wall of worry here. So could this be a trend going? That's a possibility. It's one of the reasons why I'm kind of pushing this trade a little bit.
Right.
To see if the VIX does go to a lower low here in the next several days. But we got the 10-day, the 21-day, and a 3-month trend readings all in bullish territory. And that's kind of a sign of a trend. So we'll see if that works out or not. Don't know if it will or not. But we go to chart 6.
Okay.
The bottom window, we were talking. You and I were talking, and we were talking about the 2-day trend. Well, I keep a track of the 2-day trend, and before it was always around 4, but that 2-day trend sometimes back in the 2008 decline, it was around 5. You needed a 2-day trend around 5 to get a bottom going in.
Okay.
And different markets, it's a slow changing indicator.
Yes.
It doesn't switch from one day to the next. But right now we had a 2-day trend last week. Matter of fact, the day of the low, we had a 2-day trend of last week anyhow. The day of the low, which is January 17th, was 3.52.
Right.
I think it was.
Yep.
And so I drew a line across the deal, and actually around 3.5 really works better. I mean, 4 does work, but if you get it to 3.5, which is 1.75 times 2, that will also work. And that's the only reason I stayed out of that trade, because we didn't have a 2-day trend around 4. It turns out, if you go back over the last couple of years, 3.5 works good. So
nice.
Just kind of want to point that out. And we'll have some 2-day trends this year that work out to 3.5 or higher. If you see them, jump on them, because the next day is usually up.
Nice.
And the next several days is actually usually up.
Can we get into this metal chart?
Metal chart. There's 2 things going on here. Here's the metal chart. This is the inflation-deflation ratio on a daily time frame. I've been waiting for this market to go, but there's 2 charts I want to point out. This one gave another buy signal because it's inflation-deflation ratio on a daily time frame.
Okay.
We're in a buy signal right now because it's below 30, and once it gets below 30 and turns up, it's usually a buy signal. And it got below 30 yesterday, and it's turning up today, so probably yesterday was the low. So what does that mean on an intermittent term scale? Well, we don't know, but turn to chart number 8. That's the reason why I'm going to put it in here.
I have it.
At some point, to get this chart bullish, the top window is the monthly cumulative up-down volume for GDX. The bottom window is a monthly cumulative advance decline for GDX.
Right.
To get these indicators, when they trigger, they're multi-year. And the last signal was generated in January of 2021, and it's been on a sell signal since, because both these indicators are going down. To get a buy signal, both those indicators need to be above the mid-Bollinger Band.
Right.
And the blue lines show when it's happened, it got above the mid-Bollinger Band and stayed there, and the red lines are when it closed below the mid-Bollinger Band. I thought a couple times over the last several months that we'd close above it. It was close enough, but the market didn't fall through. GDX to get that.
I know. That's why I wanted to get to them. We definitely got close. We were right there. Yep. Right. Okay. Cool.
Right. Well, we need to close above the mid-Bollinger Band and hold above the mid-Bollinger Band. And so far, that hasn't happened. Will this rally do it? I don't know.
What's cool, Tim, is that the chart before that, too, the inflation-deflation, it's so intriguing because the gold stocks are actually moving today with the dollar up, and it's not that gold's up that much. I mean, it's up, it's going trading sideways, but the gold stocks themselves are moving, man. It's like, okay, we get a lot of green on the screen here in the gold stock, so. Well, listen, Tim, it's great to be back with you. It's always a pleasure, and, can't wait to talk to you again on Thursday, man.
All right, love you guys.
Love you, man. Thanks so much. Stay right there, folks. Come right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the Dow. Dow's right now trading down on 100 to get the NASDAQ up 60. NASDAQ, S&Ps are up 12. After the closeout here, we're going to have Netflix. That's going to be the big number. That's going to be, we'll see whether it's going to be kicking these tech stocks to higher price. So the low for the year in Netflix is 285. The high is 503. Now, they come out right at, so when I'm doing the update, I probably have with their numbers. They're looking for $8.7 billion. Top line, $2.19. Bottom line, so you can see they've got a lot thrown in with expenses on this quarter compared to what the gross numbers are. If we take a look at this chart here, this is pushing swings with volume. So let me pull this back, not too far. Put it back in the weekly. Well, let's try a monthly, a 10-year monthly. See, you're coming into a big downdraft, but the bottom line is that this is still On the daily, this wants higher price. I'm going to stick with the daily right now because that's the only thing that's actually giving me, like right here, you can see, I like it. We had a big expansion of volume today. Well, they come out with that big announcement too, okay? But the bottom line is that your last swing high out here was up there at the 503. You had volume of 7.5 million. We're at 491. You're doing volume of 10 million. That's saying at least wants to go up there and touch it, So we'll see whether it can just go up there and blow it away. And the market's going to be looking for growth, of course, okay? Because when you take a look at Netflix, you're talking about a forward PE of 40. $40 gets you $1 of earnings. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great one, folks. Have a safe one. Great to be back with you. I want to thank our man, Jacob Shoup, once again for taking the controls here. He did an amazing job. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Have a great one, folks. Have a safe one.